Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit about Quant and this rally that it's been in. Now, Joe had made a video about this overall bounce in the crypto market, and he had called out Quant as being one of the strong performers. I'll leave a link to that video if you want to go check it out. I want to follow up on that by talking more specifically about Quant, talk about some of our indicators, what we can make of this rally, and how far we might expect it to continue. So, this rally has been very impressive. Currently Quant is up about 164, 63% off of the lows, at least the local low that it put in back on June 13th when the whole crypto market was capitulating. And this has been one of the best performing crypto assets since that time, just really leading the way, very much a sign of strength. Let's talk about some indicators that can give us an idea about what's going on with this rally. So the first indicator I want to talk about is the market direction classifier, or MDC. So if you're not familiar, this is an indicator that is designed to identify kind of more macro trends and especially try to call trend reversals pretty early. So what the MDC does is it basically assesses the asset's price action and creates a critical level that it's watching. If the price is above that critical level, that's bullish. If it's below that critical level, that's bearish. So the yellow line here is the critical level, and I've color coded the price action to match if it's above or below. And so the line, the green and red line, is the Quant price action throughout time. So you can see is, it had been in this just ripping bull market pretty much ever since the March 2020 crash, right? Quant was one of these rare assets that really didn't experience a bear market during the summer of 21. I flirted with going red, but it was more or less just kind of bouncing along the critical value line. And then it shot off to the upside again to put in its all-time high. And now we've really been in a bear market ever since. There's only this little blip of green that got rejected back down. And now we're really putting as our biggest extension off of the critical value line, right? The MDC flipped bullish, back towards actually the beginning of this month. Or yeah, so early in July. And really, we've been up only ever since. So once we cleared above that critical value line, you can see that we kind of broke out of this consolidation range down here, shot off to the upside. And this was very much an early warning that this was coming, that one should be paying attention to Quant when it was flipping up and shooting off to the upside. I think Quant actually has rallied about 100% after flipping the MDC level. So a pretty nice move to the upside that this model identified actually pretty early on. And the nice thing about the MDC, just one other thing I like to note about this, is that, it oftentimes will call these moves earlier than some other indicators that people look at. So this purple line I put on here is the 20-week moving average. It's what a lot of people use to kind of be the dividing line between being bullish and bearish. And what you'll see is that the MDC will get you in a little bit earlier than the 20-week would in terms of when you should start getting bullish on an asset. And here it would have gotten you out a heck of a lot earlier than the 20-week would have. And then again, it would have gotten you in a heck of a lot earlier than the 20-week would have over here. So I just like to identify that and say, why should we look at the MDC? Well, because it tends to be better at calling these things earlier than something like the 20-week. And so with the MDC, currently it's looking at a price level of $65.6 as being this kind of key level here. So really, as long as the price stays above this level, the model is going to stay bullish. Now, this is a dynamic level. It changes as it's constantly reassessing what the price is doing, and it will change. And so, we've seen it already start to hook up. I suspect it will continue to rise back up as well to some degree. And so, but really, as long as we're above that, from this model's perspective, there's no reason to be particularly concerned yet. And so, right now we're bullish, and this model sees no reason not to stay bullish, or to think that this is not, going to continue to necessarily be a uptrend. So obviously, I'm not calling that we're going to do this again off of this level here, but certainly something like this could be in the cards. One of these more short-term moves to the upside could absolutely be possible. So that's the first thing I'm looking at here, is that from this model's perspective, we're in an uptrend. There's no reason to believe that we're not in an uptrend as of yet. So far, so good. A point for the bulls, I would say there. Okay, let's talk about a different indicator we have here, though, which is the upside downside potential indicator, or UDPI. Now, if you're familiar with this indicator, it's a risk model. So basically, higher values are higher risk, lower values are lower risk. The yellow line here is Quant's price action. The white is the UDPI level, the long-term UDPI over that same time. So long-term, this is a model that is reactive to moves that play out over months. So it's more long term focused in its time horizon. What you can see is that we have, moved back up in risk since this local bottom back here in middle of June, but we're still below zero, right? We're still pretty well below zero. We're actually just a bit about negative 1.5 or so on the long-term UDPI. So really, we have quite a bit of long-term upside potential that it thinks is plausible, and more upside potential that it sees as plausible in the long term than downside that it sees as being plausible. So, it's another point for the bulls in the longer term, right? That, should we be going to a point where this will form a local bottom, or could be the bottom of the bear market, then the kind of risk reward is still favorable. Although obviously, it's not as favorable as it was back down over here. But the model that gives me a little bit more concern in the short term is the short-term UDPI for this current rally we're in. So this is a model that cares more about moves that play out over days to weeks. A lot more short-term focus in its time horizon. And you can see that, it had its local bottom down here, as did the long-term UDPI in the middle of June. But the short-term UDPI has been shooting up to the upside. In fact, we're back at a similar level that's oftentimes acted as resistance in the past. And so, getting up above 2. And so, should the short-term UDPI continue up to 3 and beyond, I'd be very concerned. I'm already concerned. Like, I already think that this actually could be a very plausible point for this rally to have to take its breath. Doesn't mean it has to go into a downtrend, right? We could see, have to consolidate, maybe correct a little bit, set in a higher low, and stay above the MDC critical level. But really, to just continue blasting off from here, I would be kind of surprised if we could move too much beyond this. Again, I could be surprised. I could be wrong. We could continue moving up. But, especially if we start moving into these risk levels, and especially if we get up to here, I'd be getting very short-term bearish. Again, not long-term, because I think long-term there still is, quite a bit of upside potential that could be realistic. But, in the more short-term, I think that the rally is likely to start losing steam soon, or certainly if we get up to these risk levels, I would expect it to really start losing steam. So I think a lot of the move is actually probably already played out for this rally. I would expect consolidation, or maybe even have to set in a higher low before we can move back to the upside. But again, that doesn't mean necessarily in the long term it's a bad risk reward, but at least in the short term it's looking like this rally is likely to start petering out, is what I'm seeing. Now obviously when we're talking about risk, the one caveat we have to put with all of this is that this is all assuming that there's not going to be some external factor that's going to cause a massive crash, right? We saw this big capitulation all the way back down to this local bottom was probably in no small part being driven by the capitulation across the whole crypto space. So first off, when we're talking about risk, we have to just keep in mind that those things are always possible, always something that's worth keeping in mind. The other thing we have to keep in mind is macro risk, right? If the macro markets crash, if the stock market crashes, etc., that could also be a sign for concern. We're still in very much a bearish state in the macro market and frankly in the crypto market generally. That's another reason why when I see the short-term UDPI getting this extended, it makes me kind of think that this is probably playing out, because these kind of rallies are harder and harder to sustain in bearish conditions, because people, if they're getting into profit, if they bought down here and they're now up over 100% in profit, they might just be looking to take that gain, that kind of rare gain they've been able to see in this down-only environment that's been 2022. So that's something else to keep in mind here. So of course, not financial advice. You should make your own opinions, navigate this as you see best fit, but that's just what I'm seeing here. Now to flip back to the trading view chart, just to talk about one other indicator we can look at, is just simply to look at volume that's transpired for Quant in the kind of recent price action. So I'm going to turn on the volume profile here, zoom in a little bit more recent price action here, and let's just take a look at where the majority of the volume has transacted. And what we can see is that we've really rallied up to this first kind of big spike in the amount of volume that's transacted at this price level. So that's what this, if you're not familiar with this volume profile, basically what it's doing, just looking at all the volume that's been transacted at different price levels and then just showing it to you here. So just taking all the volume, just showing you where does it actually happen on a price level basis. What we can see is that this level here, around $100, quite a bit of volume transacted down around this level, which means that there are probably a lot of people who have their cost basis at this point. So the fact that we've kind of hit here and started to consolidate sideways kind of makes sense, because what's probably happening here is that some of these people who have their cost basis here are saying, all right, I'm just going to get out at even. I'm just going to take this. There might be some other people who had bought in here who are looking at this indicator and saying, all right, this seems like a resistance point. I'll take some profits here. And so, that's one place where we might be seeing some selling pressure, that the bulls are going to have to overcome the selling pressure, both from the people who are at their cost base and trying to get up break even, and the people who are deciding to take profit here because they think it might be a resistance zone. If the bulls can overcome that, then the next level we'd probably look at is actually up here at around $175. So there'll still be some selling pressure probably through here as well, but the next big spike is all the way up here at 174. So what I'm personally looking at is I think it's totally plausible that this is the local top for this rally. Doesn't mean we have to go and set new lows, right? We could go and set in a higher low or just kind of consolidate in this range. But I think that there's going to have to be a lot of strength from the bulls to push beyond that. And we've already seen volume start to taper off. I think you need to see more, a high volume push to really kind of break through this resistance to push us up further. But if we do that, then you'd be looking at this probably higher level at that point. And really what I would expect is that if the broader crypto market gets more momentum surging into it, an asset like Quant might be one that people have seen it performing well. People kind of FOMO into it, rush into it, that could push it beyond that resistance up to these next levels. So my kind of outlook from this perspective and also from the short-term UDPI is I think this general level looks like a reasonable spot for a short-term top, and then consolidation or having to set in a higher low before we might be able to move back up and push through that resistance later. And I think ultimately our ability to actually do that is going to depend on the broader crypto market. I think that if Bitcoin, Ethereum, etc. have another big push and their price action appreciates a lot, that could be the kick in the pants that Quant needs to move up further. But again, this is all short-term focused. And I think people have a long-term outlook for Quant. If you think that broader macro conditions are getting more favorable and that we're actually more realistically going to be able to see some upside, I think there are some reasons to think that Quant could have some nice performance in the next bull market. Now, obviously, past performance is not any guarantee of future performance, but certainly Quant has been an incredibly impressive performer since its inception, right? Except for this one kind of bear market going into the March 2020 crash, it's been pretty much up only ever since. I've switched over here to CoinMarketCap just because none of the TradingView charts for Quant actually have its full price history, so this just lets us see that more clearly. But really, ever since March 2020, it was just up only pretty much. It didn't have a bear market in the summer, which was one of the rare assets. It actually moved up in the summer of 21, whereas most other assets were crashing. So now it kind of had its second big bearish phase. We don't know if it's over. So, I'm not meaning to call the bottom here yet. It's that it's put in a local bottom. It's in its current second bear phase. We don't know if this is really the start to something different. But certainly, Quant's not one that I'm betting against in the long term. And part of the reason I say that is Quant has a bit of a different approach to a lot of other crypto assets. Quant is much more business-oriented, business-facing than a lot of other crypto assets, which are a lot more focused on speculation. Not to say that speculation hasn't driven Quant to a large degree. It certainly has. But what Quant is trying to build is a much more enterprise-based kind of ecosystem and really building out use cases that are being used by enterprises, which then drives native demand for the token, use case derived demand, not speculative demand, which could then lead to it being more stable in the long term and see some price appreciation based on actual organic demand rather than just speculative demand. So that's one reason why I'm watching it closely. I don't personally, and again, not financial advice, but personally, I don't see the current price actions as being especially favorable, although, it's crypto. Anything could happen. It could be a week from now, Quant could be trading up at $200 and I could be, this could age terribly. But just from the data that I'm seeing and how assets tend to perform, especially in these bearish conditions, if you see a short-term UDPI up above 2 and getting close to 3, that makes me get kind of concerned about that rally being able to continue there. Doesn't mean we have to go set new lows or anything by any means. But what it does mean is I think that there's a decent chance we'll see a dip that would be then a more favorable entry for anyone who's looking to get exposure to Quant. So again, not financial advice, should navigate this the way you see fit, but that's just what the data is telling me. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there.